Hello, everyone. Dan Bossi here from Ag Resource. Ben is traveling today and won't be with me, so you're stuck with my assessment of what's going on in world markets. As we look around, Chicago is mixed to slightly higher. We've got some strength, if you will, modest be it, in Paris wheat futures and some of the grains in Europe. However, the Chinese markets were mixed overnight. But I would point out that interior Chinese corn prices have rallied rather dramatically when we look back to February. So for whatever reason, we believe it's related to dryness in China. We are getting a sizable rally there. In the news this morning, we've got, of course, the U.S. Talking their first trade deal with the U.K. This, of course, is President Trump meeting the UK Prime Minister. We are expecting an announcement at 9 o'clock this morning in terms of what will happen. That's 9 o'clock Chicago time. As we think about these trade deals, I do not expect that it will feature a lot of agricultural goods into the United Kingdom. That being said, it's the structure of the deal that will be important. Our assessment at Ag Resource Company is these trade deals will not be specific, but will have categories of which agriculture will be one of them. And the question is how much money is allocated to agriculture as these trade deals go forward. So as we look at, of course, reducing budget surpluses from other countries in terms of their trade with the United States, we'll be looking at that agricultural category in terms of what it means going forward. Now, as we think about why the Trump administration is so focused on these trade deals, I just wanted to put together this graphic of the U.S. trade deficit. And notice that in the last 4 to 5 months, it's just skyrocketed to the downside. We are seeing deficits that are now approaching unprecedented levels. So this is encouraging the administration to go further with tariffs and trade negotiations so that it can erase at least a portion of this deficit per se. The UK as a start, we would imagine there's 3 or 4 other countries which will be lining up in the next couple of weeks, and we'll watch them all very carefully, especially in that agricultural category. This morning's U.S. export sales were strong. We were looking for this kind of big sales, if you will. 65.5 or 65.4 million bushels of corn sold last week, as you see here. As we look at wheat, including old and new crop, over 20 million bushels, and soybeans 13.8. Now, your eyes should also shift over to total commitments. Total corn commitments are nearing 2.4 billion bushels. And so we're very, very close to USDA's annual forecast at 2.55. Ag Resource has been using an estimate 100 million bushels above the USDA, but based on the corn sales this morning, our modeling is now showing we need to move that up to 2.7 million bushels, so a full 150 million bushels more. In terms of wheat, looks like we're right about on pace with USDA, maybe 10 million bushels less. And on soybeans, we also believe that USDA is about 30 or 40 million bushels too low with their export estimates and need to be up closer to 1.865 million bushels. So when you look at this, it's a very strong week. And we did have new sales in the daily report, Pakistan and soybeans, corn to unknown in Mexico, and both an old and new crop destinations. So sales are really doing quite well in terms of grain, even with tariffs in play. I mentioned yesterday the what we consider to be one of the hot spots for global weather coming into the summer of 2025. That, of course, is the drought across northern Europe. This is a map showing you rainfall percentage of normal looking from April 1st to May 20th. We're using the 10-day forecast, or at least taking it forward where there's some reliability. Notice the dryness that is now building and rapidly building in a lot of these areas. Now, the only good news is exceptionally cool across portions of Poland, Eastern Europe, and into the, of course, western areas of Northwest Russia. In fact, lows will make it down to freezing or frosty levels. So there will be patchy frost across this area. Watch this area very closely. I think going forward with the European grain stocks relatively tight, this locked in weather pattern, it's stable, it's an omega block that's happening, should be carefully monitored each week as we go forward, because this will be important for U.S. corn imports or exports, European corn imports looking forward, and that size of the European wheat crop. Also this morning, I wanted to mention that the weather forecasts have backed away in providing a lot of rain for the Chinese wheat areas. This is the same forecast of April 1st to May 20th. Notice that the Chinese wheat areas will stay exceptionally dry. Some rain across the far southern areas, but that front, as we call it, never pushes far enough to get the bulk of the winter wheat area within China. Now, we imagine that China is irrigating about 40% of its winter wheat crop, but with wheat now harvest likely to start somewhere in the first 10 days of June, we're running out of calendar to get rain into this wheat area. I am believing that China will import 10 or 11 million tons of wheat in the 25-26 crop year compared to 3.5 million metric tons last year. So this has a big impact, if you will, on world wheat demand in the upcoming crop year. Lastly, I wanted to finish up here just with a highlight of what's going on in the United States. You can see very good planting weather. If we look at the forecast here, right, the rainfall anomaly, not a lot of rain across the upper Midwest, especially in the northern plains or Nebraska heading into the Canadian prairies. If you look at the rainfall percent of normal map to the left, this is rainfall since April 1st to May 20th. Notice that, again, that area is becoming exceptionally dry, and we would imagine we'll start to see a tongue of a drought developing here that we need to be close attention to longer term. Overall, I just wanted to close in saying I think we have some interesting markets ahead. Trade and weather are going to be very important. We do have this demand base, which is building under the grain markets, which we think limits the downside, at least pre-pollination in December corn, to maybe something like $4.35, November soybeans, maybe $10 to $10.10. As we look at the wheat market, maybe another 10 or 15 cents to the downside. Once we get past the May report on Monday, I think these weather issues that we were talking about just a few minutes ago will become more important. I'm Dan Bossie, President of Ag Resource. Wish you a successful trading Thursday. Again, look at the Ag Resource research. We put a $1 offer for you to get specific recommendations and more in-depth research as you think about the weeks ahead. Everyone have a great Thursday. We'll be back tomorrow morning.